Right, let's have a look at the Ichimoku cloud, and I'll explain how to use it. Basically, it's not as complicated as you might think, but there's a few things you look for. So first of all, what can we see? So we see this cloud here. We see a green cloud. We see a red cloud. We see this, which is essentially a 26 period representation of the price action based on where it's opened and closed. So 26 periods behind what's actually taken place recently. So you can see that this was 26 periods behind this price action, and so on and so on. So this would match the candle closes of the price action 26 periods behind. Alright, so there's a very easy way to use this, and it's all about confirmation. This blue line, we call it the conversion line. This red line is called the baseline, and they all have Japanese names, but we've basically made it simple by calling these conversion and baseline, and we still call this the Chiku period line. Well, these are basically moving averages, but they're calculated in a slightly different way, so they're not as simple as basically a moving average. And by using the cloud, the cross, and the Chiku all together, you can find yourself, if you're able to discipline yourself to use it appropriately, you can find yourself on the right side of a trade a lot of the time. Now, no indicator is perfect, but when it comes to something with that helps you with your discipline, if you're prepared to wait for these signals, especially on the longer term time frames, I always prefer dailies and weeklies, but Ichi clouds do play out on any time frame, but my preference is always going to be a daily, if not the weekly, because what we're looking to do, and what this basically does, is it tries to confirm, with a relatively good degree of accuracy, a change in trend direction. So first of all, what are the clouds? Well, the clouds again are moving averages, just like the conversion of the baseline is, and essentially the Chiku period. They're all basically moving averages that have been tweaked to a certain way to basically collaborate with each other to give you a better idea of where it's going to go, and also a set of rules. So if we're underneath the cloud, if we're underneath a cloud, any cloud, whether it be green or red, you should only be really interested in taking short positions, right? If we're above the cloud, if it's red or if it's green, your interest will be only taking long positions, alright? So short positions to take place beneath the cloud, long positions to take place above the cloud, and if we're ever inside a cloud, it's best to wait, right? It's not really a tradable zone, because you're not going to get the level of confirmation that you would get if we were below it or above it. So now we understand what the cloud is, which is essentially a set of rules, more than anything else. We now look at the conversion and the baseline. So the conversion line is this blue line, and the baseline is this red line, and we're looking for crosses, just like you would get on moving averages, which is essentially what they are, but it's not quite that simple, but they are basically moving averages. And a negative cross like this would mean a change of direction, but it's not a perfect signal because we are above the cloud. We only really are interested in buy signals when we're above the cloud, even though this was a signal and it would have played out lovely. It's not perfect, as in we have to stick to the rules if you want to play this game with the Ichimoku cloud. So we came back beneath the cloud. No more sell signals below here, although we did get a buy signal here, but again in this instance we're beneath the cloud, so we can't play that one because it's not going to be perfect. This isn't the rule. The rule is we look for shorts beneath the cloud and longs above the cloud. Now we got a short signal here in the cloud, and again this isn't how you play it. You don't trade within the cloud. But now what's happened is we're above the cloud, and we've had an Ichimoku cloud cross, conversion baseline cross I should say, above the cloud. This is one of those things that we look for as far as confirmation is concerned. Above the cloud, positive cross, is two sets of rules that are now lining up for a perfect buy signal. And it doesn't mean that it's going to launch straight away, but what it suggests here is we're going to have a change of direction, and it will be sustained. So the last thing we look at now for the third level of confirmation for the perfect signal, because so far it's looking really good, but the perfect signal, we need to look at the Chiku span. Okay, so the Chiku span again is 26 periods behind current price action, so you could always have a look at the price action, but we were looking for the cross. So this is a daily time frame, so we're going back in time, so try not to let this confuse you too much. But if this cross took place above the cloud like it has, and then we go back 26 periods to when that cross took place, which it will likely have happened anyway, so we can assume that because the candle started here and closed here, we'll measure it from the center. We go back 26 periods just as a representation of what's going on now. Where is the Chiku span? It's above the price action where the cross took place. So this is now a perfect buy signal. This has got 3 levels of confirmation. We've got the Ichimoku cloud, which we are above, where the cross has taken place above the cloud. 2 levels of confirmation. 3rd level of confirmation, the Chiku span is above the price action where the cross took place. So this now has turned into a buy signal, and this is still playing out at the moment. So the cross took place around here. If we carried this on to where we are at right now, that's so far been a 56.5% move and counting, because nothing has changed in this at the moment. This is going to continue until we see a sell signal, and we'll look at that next. Right, so now let's find out where the trend will end. So we understand where it's going, and we need to find out how to get out of this trade if it comes to it. And the way to do that, there's 2 ways. There's basically the use of the Chiku span, or the use of the Ichi conversion baseline cross. So there's 2 exit signals depending on how you want to play them. You can get out early, or you can get out a little late. It's up to you, but they're both sell signals. Now they're not going to be short signals because they're going to be above the cloud, but they are going to suggest that the trend is looking to diminish a little bit. So let's have a look at this one, and we found back here that we were above the cloud, which is good. We had a conversion baseline cross, which was here, which is a buy signal, and we can have a look at where the Chiku span would have been at the time. Go back 26 periods just because it's an older chart, and we would have seen that basically the Chiku span would have been above this price action here, so that is a buy signal, perfect buy signal. So we look to sail that one up, don't we now? So we buy in and we wait for this Chiku span to come and cross into the price action. So obviously this is 26 periods behind, so this wouldn't happen here at this point here. We would be back here. So we've got to find out where would the price action be when the Chiku span hit there. So we go 26 periods in front. 26 periods would have brought us actually back here. So in this instance, the Chiku span would have got us out around this price level here, which is 26. So what we'll do is we'll measure from our entry point back here, back to here, and that would have given us a 271% return from sort of entry to exit if we used the Chiku span. We could have also used this, which is the Ichimoku cloud conversion baseline cross, which crossed when the price action was between here and here, which gave us a similar read basically. So they're both accurate in telling us that the trend is coming to an end. Now obviously it hasn't spotted a top, has it? But that's not what it's for. It's to give you an idea of how strong a trend is going, and if a trend is going to the end. Now I've never known anybody complain about receiving over 250% return on an investment. So whether or not you got out at the top or not, you still made over 250% by using this indicator on the daily time frame correctly. Now just because it tells us to get out, it doesn't mean we want to short because we're above the cloud. But you can see how useful this indicator can be, especially for spot holds, low leverage longs, because it's a long-term progression, and also bot trading. You can see how it would be very useful for that, because we're looking to spot a trend going up and a trend going down. So hopefully that was useful to you, and that's how to use the Ichimoku cloud perfectly. You can use it in other ways, but that is the rules of it and how to use it appropriately. Thanks for watching. Take it easy.